And today I'll take you through question 3 of POA of 2024 Mid-June. So without reading the question, let's look at the requirement to see what we're required to do. So this is based on partnership. The first part is asking us to prepare an income statement. The second part is asking us for the appropriation account for the partnership, and the third part is requiring us to prepare Jay's current account, just Jay's, and that's it. So 3 parts. So income statement, current account, and appropriation account. So the information for the current account, you'll get most of it from the appropriation account. We have to prepare the income statement to get the net profit that will be used in the appropriation account. So let's see. So we're given the gross profit. So we don't have to do the trading part of the income statement. So we just have to do the profit and loss section. Operating expense. So this has to go in the income statement. Non-current asset, cost price, and then provision for depreciation. We'll use this to calculate the depreciation for the period. So these 2 items will be used to calculate the carrying amount. So let me just put income statement. It's not really income statement though. It's the balance sheet, but it has to be used for the calculation purpose of the depreciation. Current account. This will go in the current account. Drawings. This will also go in the current account. Interest on drawings. This will go in the appropriation account. Partnership salary. Appropriation account. Why did I put AP? Appropriation account, appropriation account. Capital accounts, this is not going to go in the appropriation account, but the interest and capital will be going in the appropriation account. Loan to partnership. The loan will be in the balance sheet, but the interest on the loan will be in the income statement, even though it's a loan to the partnership. Closing inventory has been understated by 3,500. If closing inventory has been understated, it means that the gross profit has also been understated. Therefore, we have to put this in the income statement and we have to add it. Right, so we added it, so the gross profit will come back to the actual amount it was supposed to be. Non-current assets are to be depreciated by 20% per annum using the reducing balance method. Right, so as I was saying earlier, we have to use these 2 items at the top here. These 2 items at the top here to calculate the depreciation. So without further ado, let's go to our income statement, our gross profit. Or let me take a screenshot of this and add it to the page quickly so I don't have to go back and front slowly. Alright, so it's nearby. I will move it as we work. Alright, so at the very beginning here, we have to put Ban and J as in our business name, I guess, because they didn't give us a name, right? And this is income statement, or you can put profit and loss section. Income statement for year ended. For the 1st December 2023. Alright, so the very first item we'll put there is gross profit. And we have our $2 signs. The gross profit is $284,000. Next item. Alright, so the best possible thing is to put our closing inventory, so we'll have our corrected gross profit. So add understated closing inventory, and this is 3,500. Will give us 287,500. So this is the corrected gross profit. So now we have to put in our expenses. So let's go. We have expenses, and the first one there is operating expenses. Operating expenses, this is 107,000. Our next item is depreciation. Alright, so depreciation, we will calculate that at the bottom here in a few. And after that we have loan interest, which has to be calculated as well. So let me move this back. Alright, so the carrying amount equal cost minus accumulated depreciation, and the cost of the asset is $695,000 minus $215,000. This will give us $480,000. So this is not the depreciation, right? This is the carrying amount. So to find the depreciation, we have the carrying amount times the rate, and this is 480,000 times 20%, 1212, and this will give you $96,000. Right, so our depreciation is $96,000, and the loan interest we have here 25,000 was given, and the rate is 8%. This will give you a sum of 2,000, I think. Let me calculate. Yeah, $2,000. So let's add up that. So we have 107,000 plus 96 plus 2. This will give you 205,000 as our expense. $205,000. Please try and get yourself aligned. And remember, this is expense, so it has to be minus. So we have here $82,500, and this is our net profit. And that's it for the income statement, but we're not finished there. We have to, well, we're finished here with the income statement. Now we have to go to the appropriation account. And our amount we had was $82,500. Alright, so let me just put that $, $82,500, and we can crop this and remove the piece at the bottom. Alright, so once again, ban and J, and this is appropriation account. Appropriation account for year ended 31st December 2023, and this was profit for the year. Alright, so for the appropriation account, we have to get 3 sets of information. We have to get interest on drawings, we have to add that, we have to subtract interest on capital, and we have to subtract partnership salary if there is any. Right, and then we share out the residual profit, or the profit that's remaining. So let's start with interest on drawings, because we have to add that, right? Add interest on drawings. And we have two persons. We have Ban and we have J. So it's most of the times, or some of the times, you might have to calculate this, but in this case they give us this, right? So we have Ban with 200 and J with 2700. That will give us 5,900. 5,900. Right, so I think we are going to be short of space. Anyway, so I'm not going to add this because we might not have enough space to do the rest of the calculation. Anyway, let's partnership salary. Partnership salary, and this went to J, and this is $36,000. Next is interest on capital. We have J and we have Ban. Okay, we had Ban for solid time, so let's stay consistent. We had Ban and we have J. So here we have 3%. So right at the bottom we can put our calculation. So 280,000. This is Ban's capital, interest in capital. $280,000 times 3%. 280,000 times 0.03. This is 8,400. And J is 260,000 times 3%. And that's 7,800. So we have 8,400 and 7,800. So let's add these up. We have a sum of 52,000. $52,200. And remember, this has to be subtracted, so you put your brackets and let's go. Plus 82,500 plus 5,900 minus 52,200. We have a sum of 36,200. And this is our residual profit. And then we have to share the profit, and the thing is, this space is so limited. Anyway, share of profit. Share of profit. Share of profit. Share of profit. So Ban is receiving three shares and J is receiving 2. So Ban is receiving 3 out of 5 times 36,200, and J is receiving 2/5 times 36,200 divided by 5 times 3. So Ban is receiving a sum of 21,720, and J is receiving 2 out of 5 times 36,200, 14,480. And if you were to add this up, you're supposed to get back 36,200. And that's it for the appropriation account. Alright, so the next item we have to prepare is J's current account. So let's go J's current account. J's current account for year ended. December 2023. So we have 3 columns on each side. This should be date, details, $sign, as in how much money, and then we come back date, details, $sign. Well, it's crazy though because we already have one fixed date, and anyway, let me choose next call. Say 2023 December. Never mind. So the first one they brought down will be brought down on the first day of the year. Why did I remove? So it's gonna be 2023, but 1st of January. January 1st, balance brought down. Balance brought down for J is, okay, it's here, it's in it. Yeah. For J is on the credit side and it's $7,300. Alright, so next item is drawings. This is gonna be December 31st, or this is from December, January to the 31st. So anyhow, we should put that, but how is it gonna fit here? Anyway, drawings, and we have $26,000. And then we have interest on drawings over here. And this is for J, it is $2,700. Alright, so the next item we're gonna collect that from the appropriation account is partnership salary. J also received a partnership salary. So this is January 4th to December 31st. And I have this advantage of copying this. And pasting this here. Okay, still time consuming. Anyway, over here we have, what did I say? Salary. Partnership salary. Partnership salary of $36,000. Then also we have interest on capital. Interest on capital for J, and that is $7,800. And the final thing is share of profit. Share of profit, this is going to be December 31st. Profit, and that's $14,480. That's about it. They did not say if to balance the account or not, so to be on the safe side, let's just balance it. Alright, so the debit side we have 28,000. Let me remove this. 28,700. 28,700. Please write with pencil so you can always remove it. On the credit side we have 7,300 plus 6,000 plus 7,800 plus 14,480, 65,580. Let me confirm. 65,580. Alright, so the credit side is larger than the debit side, so we will carry down to the smaller side. This is going to be December 31st. Balance carry down, and that's going to be 36,880. This will give you a sum of 65,580. 65,580. Double line. 2024 January the 1st. Balance brought down, and that's going to be the balance carried down, which is 36,880. And just like that, you have earned yourself 20 marks. I hope this is clear.